Hey everyone. Some time ago I set up an experiment with a lot of emulated algorithms, and I split them across a grid of 4 different Bitcoin volatility levels, 4 different distances, and the buy side and the sell side respectively. They've been gathering data for about 2 weeks now. Here they are, still working hard. We can look here and see that the orders are all placed, a very, very beautiful grid. Now, what are the results of all of this? Let's go to reports and we'll see that here they are, here are the results. We have about 700 trades altogether, and now it's about time to analyze them. Let's see how they stack up. I have exported all of this to CSV, as per usual, and here are my wonderful reports. This is a lot of data. I've got, as I said, 700 trades, over 500 profits, 154 losses. But first, let's just take a look at what this looks like, what it is. The first thing that you would notice is that they come in groups. Here is Bitcoin volatility below 0.5. All the trades are happening, and then we go straight to another range of 1.01 to 3. So volatility switched here, and we got a bunch of trades in that volatility range, and then at some point it got lower again. And what is very interesting to me is that if we were to look where the trades actually happened, so here are my descriptors. AM30 stands for Active Markets Top 30. We have trades on only 2 Bitcoin levels, and they are not even adjacent to each other. We've got many trades at Bitcoin below 0.5, and then we've got a bunch of trades on Bitcoin from 1 to 3, but nothing in between. That is quite weird to me. Of course, given that the other Bitcoin range is quite narrow, from 0.5 to 1, it's still weird. There are a couple of reasons for that. Either Bitcoin was going very fast from a low volatility straight into here, and thus no trades had any time to happen. Or alternatively, for some reason, my algorithms were off at that point. And yes, there have been times when they were off. I will probably get into more detail about it sometime later, but overall, I had a couple of core restarts which turned these algorithms off, and I also had an auto-stop filter triggered because alongside these algorithms I had some real ones trading, and they were not trading so well. So here, as you can see, my balance is only 202. I'm pretty much back to where I started. But yeah, auto stops triggered, shutting every algorithm off. If we go here, you can see that it's not some of the algorithms that are stopped, it's all of them, which includes my emulators. I could have been a bit smarter about it and included my emulators here as the exception, but oh well, I forgot to do that. We'll deal with what we have. There's plenty of trades anyway. Oh, let's delete this. Let's save it as it was and start it up. Starting it up is a very important point. I'll get to it closer to the end of this video, where we have show me the money, or in this case, where in the world is my money? Now let's go back to analyzing these reports. Second thing we may notice here is that the P&L is huge. It's a very stark contrast to my real results at this point, but you know that the algorithms on emulation are very, very optimistic, and you wouldn't expect to have that with those settings. Now the ROE is off the charts. Again, we are not trusting that. Actually, I have realized what emulators are good for, like the only thing that you can trust them with, is to show you how many shots are there at each particular time on each particular market. Now, the number of shots is a very valid and solid metric, but the quality of these shots and the results that the emulator is showing can be pretty much thrown away. It's very difficult to extrapolate the results of the emulator in terms of profits or losses or ROE to real life. So we need to find some sort of metric that is close enough, good enough, but that's not being overly optimistic. Talk about being optimistic, look here at the average take. It's over 0.5%. And in the algorithm, we have a take profit of only 0.2. As you may remember from the analysis of real trades, the take profit is very, very close, the real one, very, very close to what the algorithm says. Now, for the stop loss, in real trades, it's usually bigger, like 0.2 or 0.3% bigger. And in the emulator, that is true. The stop loss is 0.5 in these algorithms, and the real result is 0.74 or 0.8. Now, this should give us our target P&L ratio for emulated algorithms, and we can compare that with what we have understood from real life. So overall, the profit to loss ratio was 3.5, and in real life, that is not enough. I remind you that I'm looking for anything over 4. Here, with this kind of average takes and these kind of average losses, the emulator would be happy with anything over 1.5. So if you divide 0.74 by 0.52, you'd get about 1.5. So that is a good ratio for an emulator, but for real life, it's bad. We are looking for anything over 4, and that's the avenue for analysis that I took. Well, how did I do that? You already know, pivot tables. This is what I came up with for analyzing the profit to loss ratio. One of my friends took a look at this and said, "This is completely unreadable. I have no idea what's going on." But since I have built it, I know exactly what's going on, and I'll do a brief explanation for you right now. Well, first of all, it's interesting to see how many coins we have covered with at least one trade. And it is exactly 100. 100 coins out of 180 something listed on the exchange. A bit over half the market. Should be quite a representative selection of coins. Now, what do we have here? Across rows, you already know we got coins. And in the columns, we have the following. So these are split into sections for buy and for sell, and then for the total of buy and sell. Here we have the result of total USDT. This is just to gauge whether it's been overall profitable or not. And then we have this, the number of profits on this coin. On the buy side, the number of losses, and the same here, profits, losses, and then we calculate the profit to loss ratio. And as for my Bitcoin volatility, it's here in the filters. Right now we're at the overall picture. We can switch to only low volatility, it would look like this. We could go to only higher volatility, it would look like this. Let's go back to both of them. And here I've also got the distance. It's a bit of a mess here, but I know that in my experiment I only had 1.1, 1.5, 2, and 2.7. So these are relevant to this pivot table, because here it actually contains all the trades that I have made, real ones, experimental ones, whatever, but I am just filtering them out through these two descriptors. All right, now let's look at the profit to loss ratio. There can be several options here. So one of them is, as you can see here, 0 profits and 1 loss. This gives us a ratio of 0. This is not very interesting to us. We don't want to trade coins like this. Of course, only 1 loss is not statistically that significant, but we'll take it up another time. Okay, another one is if we have non-zero number of profits and losses. So here we have 1 profit and 2 losses, which gives us a ratio of 0.5. For a more favorable situation, we could look here, 2 profits, 1 loss, and a ratio of 2. Not good enough. And there are other ratios with more trades, like this 25 to 9, still not good, too many losses. But then we come to something different. Here is where we have 0 losses, but we have some profits as well. And the pivot table, when it tries to calculate the ratio, gives an error, division by 0. Of course, it's absolutely correct mathematically, but I need to somehow make use of this information. So here we have 2 to 0, 1 to 0, and then there are some better examples like here, 20 to 0. Essentially, all of the 0 losses coins are approaching infinity on their profit-to-loss ratio, but not all infinities are created equal. So I'll show you now what I have decided to do and where in the world does this 66 come from, 77 or 99. I was thinking long and hard about this, and this is what I have come up with. This is the final formula that is used in my calculation right here. It's Excel speak, it's spreadsheet speak, but the logic is described right here. I didn't do it just for you, I did it for myself because it was a bit confusing at the start. So first we check if the profit to loss ratio ends up being a division by 0. To do that, 2 conditions have to be met. At least one of the numbers should be 0, as we have seen here. This one is 0, and this one is not. And vice versa, where we have 0 profits and some losses. So in order to check that, we just multiply the numbers, and it should equal 0, means one of them is 0. Now, secondly, we have to verify that the profits are more than the losses. In order to do that, we subtract the losses from the profits, and if it's greater than 0, then it means that the 1, 0 that we had in this equation are the losses. Okay, so this is the first part, the first if. Now, when these conditions are met, we go into the second if. Now we look at what the infinite profit-to-loss ratio actually is. So if it is from 0 to 3 profits, not inclusive, I'm putting a 66. It's just a code. It means nothing, but it's just an indicator of this type of range. So from 0 to 3, I don't think it's statistically very significant. And I put a 66 in yellow. That means I should watch out, follow these coins a bit more closely and see how they show themselves next. Now, if we have from 3 to 8 non-inclusive profits versus 0 losses, then I put a 77. That means it's pretty good. Now, if we are beyond 8, from 8 to 60, and 60 here is just a random big number, then we put a code of 99, which means, wow, this is super great, and I would really love to trade that pair, such as right here. Okay, here we have dealt with infinities. Now, what if it's not a division by 0 error? Then we go and we actually calculate. We divide profits by losses, and here is our target profit-to-loss ratio of 4. So if the result is less than 4, which includes 0, then we just put a resulting profit-to-loss ratio in white, such as here. Here, these are not interesting to us. Else, if the range is from 4 to 66, again a random big number, and not to be confused with this one, it's not inclusive, then we highlight this in green, which means it's a good profit-to-loss ratio. Even though there have been some losses, we're still good. And you can see examples of them right here. Now, this is the whole logic. I built this formula, and it resulted in this. Actually, why am I using like 66 or 77 or whatever instead of just saying, okay, medium, good, best? Well, because of the limitations of the pivot table. In a calculated field, it cannot output anything other than a number. I cannot put text here. With the exception of this, that's a whole different story. You can only have one type of text. But yeah, in the end, this is what I came up with. Then I started filtering them by, let's say, low Bitcoin volatility and a distance of 1.1. This is what I got. So at this distance, at this volatility, these coins were doing pretty good. These coins were not doing so good. And I've analyzed that across all different combinations. And the result is this. Okay, a very quick explanation of what this is. So this is the Bitcoin volatility level. W is my code in the algorithm names. Right here is a W. And now, on top, I have the buy side and the sell side and different distances. Underneath, I have the coins. So here I have the ones that have been very good with 8 or more profits versus 0 losses. Here it is. Then below that I have the mid tier where they had from 3 to 7 profits without losses. Here I have something that was good enough with over 4. There have been losses, but profits overweigh them. And even below that, in yellow, I have the undecided coins. This is where the profit to loss ratio was sort of infinity, but there have been very few trades, like 1 or 2 trades here. This is for lower volatility, and I have the same exact picture for higher volatility. Let's make some general conclusions. Here on lower Bitcoin volatility, higher distances have produced no good results. Only some mid-level results, which we cannot really take as statistically significant. Whereas on the lower distances, there was stuff happening. Now let's go to a higher volatility Bitcoin. Here on higher distances, we have some stuff going on. Not here, not on the sell side. Whoops. And especially on the buy side, on the lower distances, there are only 2 coins that behave themselves well. Oh, there are lots of undecideds. All right, so this is the result so far. Now, based on that, as promised, I have built a whitelist for my algorithms. Here I am showing what algorithms will actually be created. For these distances, there is not enough data for me to make a real algorithm. But here on top, I have the good coins from here that are in green. And below that, I have a sort of backup list of coins, which are these ones, but where there have been 2 trades. So I think I should give them a try. Okay, 2 trades with profits and 0 losses. Maybe there's something good going on with them, maybe not. So I have included them here as well. And across these algorithms, I've got them for a total of 12 in this algorithm, 11, 6, 1. So at any given time where I have these running, I will have exactly 30 orders active. Now if we go to the higher volatility, this is what we have. Actually, every combination, every distance has produced some leading coins, and here they are. 5, 2, 2, 2, 8, 3, 1, 1. There'll be only 1 coin on these algorithms, but I'm trying to follow the path that I set out for myself. Whatever the data tells me, I do. with a few exceptions actually. Let me explain. So right here you can see that STMX has been so great, but I have it in red. What is the reason? Well, you might have guessed that STMX has a leverage of 8. And that's a no-no in my book. Maybe sometime I will figure out what to do with that, but no, STMX is going out the window. Next, what have we got? Here I have CRV highlighted in sort of a blue color, and also here I've got WLD highlighted. What is the reason? Well, what I'm trying to figure out is a pattern, and these are exceptions, specifically for WLD. During the time my algorithms were running, it got listed. And the activity of a coin during a listing is something completely different from its regular activity. So if we filter here by WLD, we'll see that we had a lot of trades during the first days of listing from the 26th to the 30th. And then after that, only 3 trades. So the initial hype made it quite volatile and it gave us a lot of shots, but after that it quieted down and it's not as active. I'll still include it, but I will keep that in mind. I will not put too much hope in this. Another exception is CRV. It's a well-established coin, but I have looked at the dates as well, similarly to WLD. Here we are. Out of 19 trades, 16 were done on the 2nd of August, and all of them within a few hours of each other. So this is some sort of fluke, and other than that, this coin is absolutely not that active. I will also include it, but again, no high hopes. So I have already built the actual algorithms that are shown here, and here they are in the terminal. Here. This is the whole list, and it's all whitelisted. So to make these, I simply copied my emulated algorithm. I put the corresponding code letter, removed the emulation, then removed the active markets filter because we're doing a whitelist, removed the quoted asset, and then inserted one by one the coins that are going into this specific algorithm. Now it's time to run these and see if I have enough margin, because I have left the order size at 100. It's not kids play, but it's not really huge. Let's see. Okay, let's go to my balance. Well, actually it's some sort of a glitch or whatever. If you have lots and lots of algorithms in emulation running, it doesn't update the frozen margin here. So we'll have to go back to algorithms and shut down these for a bit to see how much margin we actually need to run all of the 30 orders on the lower Bitcoin volatility levels, because I think we're in the lower range right now. Back to balance. Yeah, now we see that 108 is frozen. It's a bit over half of my deposit. It's enough, I'll stay that way. If the volatility goes high, then let's see how many orders we should have. Select these. We'll have 24 orders. And depending on the leverage of each of these coins, I think it still should be enough. Now the question is, what to do with another level of volatility that we have zero data for. This one right here. If Bitcoin is below 0.5, I have algorithms for that, I have algorithms for this, but here no real algorithms are running. That is something I need to think about. Maybe the range is too narrow. I'm not gonna think something on the spot. I'll go away and figure something out. Maybe you advise something. Now let's go back to discussing this. What happened to my deposit? We'll check out the reports. Let's go to real trades. And I got minus 26. What in the world happened? Well, alongside my emulated algorithms, I was also running my selected very, very solid 50 plus leverage coins in these algorithms at a quite short distance of 0.65. And initially it was doing quite all right. So before all of this disaster happened, we had quite a good string of profits, and at some point I got to like 229 in balance. And I was almost ready to report to you that yes, I've got those 20 bucks that I was aiming for, but then disaster stroke. We had a few losses here, got auto-stopped, relaunched, auto-stopped here again, and then this happened. I got liquidated on BCH, and straight after it, I got minus 9, and straight after it, I got minus 2, or almost minus 3. How could that happen? Well, I'll tell you. Remember when I was showing you how to do trading performance filters? I also shown you that it's sort of similar to auto-stop filters, and I went in and I said, well, I wanted to show you what it is, but you cannot edit it unless you turn it off. So I turned it off, went here, I explained to you, okay, let's put minus 5, and then I didn't run it. I didn't run it for 1 or 2 hours, and while I was not looking, I was away from the computer. That's when I got liquidated and I got all of this. So minus $20 in the span of a couple of minutes. It's very important not to be so absent-minded as to not turn on your auto-stop filters. So that's the story of what happened. Then I relaunched my algorithms and they climbed up a little bit, almost to 209. And then BCH strikes again. I need to figure something out about this coin. It sort of brings in a lot, but then it takes away a lot. The profit to loss ratio is not perfect. So for now, I have excluded it from my small distance algorithms, and I'm actually not running them because I'm running this whitelist that I have selected for now based on the analysis of my data here. Yeah, but that was pretty much the show me the money segment, or show me where the money went. My current balance is 202. Let's see what it is next time with these guys running.